May profits be upon you. I hope your trading week last week was at least well managed, if it wasn't profitable, because it was a crazy, crazy week. Guess what? We have a crazy week approaching. Non-farm payroll. Let's take a look at the week. All right. We got a lot of high impact news. All these are red folders. All right. For the euro, for Aussie on Monday, we have the interest rate decision. You know that's going to be a big boom. It'll have lots of impact on Tuesday. Look at all this news, man. Look at all this news. On Tuesday, the ones to watch are U.S. news with the market manufacturing, ISM manufacturing, and JOLTS, the job openings, right? All right, and look at this. New Zealand dollar and Aussie dollar. Aussie dollar literally has a bunch of high impact news happening all week. For Pete's sake, all right? We have the ADP, all important on Wednesday, all right, for USD, okay? I mainly focus on the main stuff that's going to move the market, like high impact, the kind of stuff that you say, all right, let me stand aside, wait for 15 to a half an hour after the news, and then I'll get back into the markets. That's the kind of impact the news that I look at. For the most part, I just trade through it. And try to be careful of news announcement times. I'll hug up my stop loss to break even or close to it or something, because I'm not trying to get zapped out of anything. All right, you can see you got high impact for pound. You got the business. You got the interest rate decision there for the pound, and then you have jobless claims and stuff for the USD. All right, this is on Thursday, and then Friday we got non-farm. All right, expect the markets to be kind of sideways and indecisive up until Friday, especially with the USD is involved. But there's going to be plenty of opportunity. You got CAD unemployment rate too. Man, it's going to be a rough week, and a lot of people sit out. A lot of professionals will sit out the week so that they can let all that turbulence pass. All right. Now, I'm going to stick to the technicals. Okay. I'm going to stick to the technicals, and we're going to start with the Dixie. All right. Well, let's do top down from the weekly, right? Top down analysis. All right. What do my notes here say? On the weekly, we are bullish and we're expecting a higher high. All right. Well, yeah. Just look at the way. Let's take a snapshot. We can see how price has fallen since the 16th of March, right? 2020, double bottomed here, and then started to work our way back up, right? USD gaining strength, all right? And we're making higher lows and higher highs all the way up here, right? And this is why we're bullish, because where's the last break of structure? The last break of structure is here. Hold on. Let me see something here. All right, the structure is right here. Okay. Once price pulled up here, retraced and broke that high, we are bullish. All right. And where are we bullish to? We are bullish to a zone of supply here on the weekly. The larger one is the weekly demand, and we're well up in there, into the 50% of that this order block. Okay, so we are bullish here. And what is the expectation? The expectation is price is going to establish a higher high. I expect this order block to fail. All right, this supply to fail and price to continue higher, but we're waiting for the established higher high. Because that looks like the next logical move, right? Let's go to the daily. All right, on the daily, let's take a closer look at this price action. All right, we see, am I missing anything not showing? Okay, it looks like I got everything going. Okay, all right, so what I'm looking at is the breaking of the high here and this impulse. And after every impulse, you expect a correction, right? Price moves higher, high, higher, low, higher, high, higher, low. And this is impulse correction, impulse correction. We're expecting price where it's at now to continue higher, to establish another high, to break a higher low, and then we expect that to be broken, right? That's the expectation. And we want to see where we're at here, because on the lower time frames, it'll tell us, it'll give us an indication whether this may turn out to be the higher high, and then we'll look for that higher low, quite possibly here. But we have to look at the lower time frames for that, right? But right now, the US dollar is looking pretty strong. You saw how it closed the week. Very bullish, very bullish. And we had a bullish week prior to that. So we're looking for more of the same, all right? Can we expect a little pullback here? Well, let's take a look. Let's look on the 4 hour. On the 4 hour, what do we, God dang it. On the 4 hour, what do we see? Do that in there, I don't know why. All right, on the 4 hour, I'm going to get rid of this order block so we don't get all tangled up. All right, I don't like a whole lot of mess on my screens. You all already know that. All right, let's take a look at this. All right, what do we see? We see price come up, price push, all right, retrace, and then it doesn't break that high. We are inside this trading range, the trading range of this candle, all right? So these are inside candles, and then we finally break the top, all right? What is this showing us? More bullishness, it's just more bullishness. This is a change of, this isn't a change of character, it's just a confirmation that after, when we're breaking highs, we're just continuing bullish, right? And then we come up here to this high, all right? And we push down, all right? This is where we make a mark, all right? Because we broke the low of this candle. We broke the low of that candle, and that is a break. That is a break of minor structure, all right? Some people will call this a change of character. This is our first clue that price may not want to go any further here, and that we might start to see price start to decline from here. All right, this might be the establishment of the higher high. All right, so we look to chalks, change of character. We look for look to chalks to give us that indication, that first indication that price may be turning. This isn't a break of structure. All right, a break of structure on this time frame, the 4 hour, would be down here, because this this low is responsible for this high. All right, this right here is, it doesn't, for me, it doesn't count as a showing of pullback. It's more like a minor pullback, a minor structure. So I'm looking for something a little bit more demonstrative. All right. All right. Anyways, but we have that indication. Prices pulled back up into this this candle. All right, and looking to tap that the base candle of the bearish engulfer pattern here. So it looks like price attempted to mitigate this bearish order block. All right, this supply. We've had price come back down, and if we just take a sneaky peek at the 1 hour, and I'm only taking a sneaky peek, you can see that we have something forming here that kind of looks like it's trying to make a head and shoulder pattern, with that shoulder line and the neckline being here. All right, so that's something to make note of. All right, we're also also is it's giving me indications that we can expect price to come after these lows. Why would we come back after? Why would we come for those the lows here? All right. The reason why is because it's a weak low. Why is it weak? Because it didn't make a new high. Now it could still work its way up, you know, but right now this looks like a weak low, and any weak high or low becomes a liquidity point. All right. We had on the 1 hour, this low is a break of structure. On the 4 hour, it is a change of character. All right, you gotta read what the time frame in front of you says. All right, sometimes the higher time frame will give you a chalk, a change of character, an early indication, a signal that price may be heading the other way, may be turning around. But the break of structure actually confirms whether there was a shift or not. You understand the difference? I hope you do. All right. Either way, I'm looking for price to possibly come further down from here. All right. Now, in the case that it doesn't, if we see that price opens up a little strong, I'm thinking that it'll mitigate this order block. It'll mitigate this order block and then come down. All right. But we're just reading the signs. I got a break of structure, and after every break of structure, I'm looking for a return to impulse. And just because it missed by a couple of ticks, all right, you see that it respected that height here. So I'm thinking that we're going to see some more temporary short-term weakness come into play. Okay, let's move to the next pair. Euro USD. All right, let's go to the 4 hour. Let's go to the weekly. And what do we see? Oh, come on, man. I crack myself up sometimes. What do we see here? Weekly, look at my notes. Bearish, break of structure, all that good stuff. Take a screenshot if you like. All right, what am I talking about? All right, let's take those. What we have on Euros USD is the complete inverse of what we see on the Dixie. All right, it should be just the mirror opposite, right? We are coming down, breaking structure, come on, man, breaking structure, right, down. So we're still bearish. Pull back, breaking structure, down, still bearish. You got the idea? All right, what we're looking for is where is the last break of structure that will determine to me what the bias of this time frame is. All right, so what did we come into? We came into demand, right? However, demand held for a good time, and then we had this reaction, right? We had this reaction here, and then price violated this bullish order block, this demand zone. All right, the deal is whenever you see that, you go to the extreme of that reaction, you go to the extreme of the reaction and the impulse that followed. You go to the top, and this supply becomes a strong high. It becomes a strong high because it broke these lows, and this order block becomes tradable. So what you would look for is, if price comes back up here, this would be a high probability trade for a short, a high probability sell. Got it? All right. So what did we do? We broke through, and you see this wick here? I want you to see it. This is a sell to buy move. All right, a sell to buy move. And you'll find that a lot of times there is plenty of juice in those little moves. those those little buy to sell and sell to buy wicks, all right, to push price back to at least give a reaction, okay? But right now we're just reading what's in front of us. Let's look at the daily, and you can see this was a pretty well-designed bear flag. All right, price generated, market makers generated liquidity at these points, took it out, again, take it out, make a new high, take out that one, and then again, we take it out, one more liquidity hunt, and then bam, we take out all these lows. This is the design of market makers, the liquidity managers. That's what they do, all right? And so we fulfilled this bear flag here, right? All right, that makes this, again, this high is a strong high. Price should come back up into this area. We should be looking to trade it. Now, also, look at this one here. This also counts as a reaction. Boom. All right, so this will be the first place I would look for that pullback and high probability trade. All right, we just got to see what the reaction will be here. All right, on the lower time frames. Understand? All right, but what am I expecting? What am I expecting? Again, come on, man, with this. Bearish, we broke supply, we broke this doggone, this low, broke the low here, right? That's a lovely break. We're taking all this liquidity here, all this internal liquidity. We broke that low, a significant low to the downside. So we are definitely bearish on the higher time frames, right? And what is the expectation? Well, maybe a pullback to more premium pricing. What is our trading range here? Well, let's go to the 4 hour before we even think about that. All right. On the 4 hour, for the Euro USD, what do we see? We're looking at the contact area of this POI. All right. What do we see here? We see a reaction. We see price coming into this demand zone, pulling up, and then breaking that low into the demand zone, right? Good stuff. We have a very aggressive bullish reaction. That gives us chalk. That gives us chalk. Let me see something here. How much is this pullback here? This pullback is 24. I look for at least 40 pips for a pullback. If you just look at, do your back testing and you look at pullbacks and retracements and stuff, and you start measuring, you take the average, about 40 pips is about right. You want to make this process as mechanical as possible. So if I see a little pullback like this, I won't say, is that a pullback or not? No, it's not. It's 24 pips. No, this one, yeah. All right, that's why I have this line here with dotted, with, you know, that's dotted, not dashed. I should have had it dashed. All right, because if price breaks that, then I know that we've gone from bearish to bullish momentum, right? We already have a chalk displayed already as an early signal. All right, price pulled back, came down, broke that low, and then broke this high. That once we break that high, that is a change of character. We come back in testing the base candle of this bullish engulfer pattern. All right, and I'm expecting from this point, I'm expecting price to end up breaking this high. All right, turning bullish instead of bearish. This is just a reaction off of this sell to buy zone of demand here, remember? Okay, so you're with me. You're with me. So that's what I'm expecting. I'm expecting price to pull up from here. All right. And some short-term weakness in the euro, pulling back to where we don't know if it's going to get up here, get all the way up here. We don't know. We don't know that. All right. We have a zone here, that price, if it does reach there, that would be interesting. And that would be a high probability trade, because this is the area that we want to be trading from. If we're going to take shorts, this would be the area that we would look to. These are, the higher it comes up here, the more high probability the trade will be once it sets up. We have to be confirmed for it. All right. Now let's go to the next one. Pound USD. Now, what do we got on pound USD? Am I missing anything? Oh, I got the wrong stuff there. Yeah. All right. D1. Okay. I'll tell you what. We're going to the weekly. And I think everything else is showing. I don't like everything showing at the same time. It drives me nuts. All right. So what do we have here? We have price bearish, right? Where's my notes? Where's my notes? I had notes. Okay, my notes have disappeared. Okay. I swear I wrote some notes here specifically for this. Did I erase it? I guess I did. All right. So I'm bearish. I'm bearish because why? It's very obvious. Price is breaking down and pulling out, breaking these lows, breaking that structure. So we are bearish as soon as it does that. All right, we pull back, we make a new low, price breaks that low, we are bearish. All right, these are breaks of structure. That's all you need to know. These just to follow the breaks of structure. All right, I didn't say breaks, chalks or breaks of short-term low or micro lows and stuff. I said breaks of structure. Okay, so we have a break of structure to the downside here. Boom, and we're finding price coming on down. Now look, we're low. Every candle breaks the low of the previous one except for this one, right? So this is a pull up. This is a pullback. All right. And then price breaks that low and continues down here. All right. That's a mark for us, because when price comes back up and breaks it on this time frame, it is not a break of structure. On this time frame, it is a change of character, because this is not one of my measurable pullbacks. I'd like to see two candles at the very least. Two consecutive candles that are trading outside of the range of the previous one. All right. So on this one, it is a change of character. That's why I had that this one not appear. All right. So we have a change of character here at this line as soon as price broke to the upside. All right. That's indicating that price wanted to turn around. Okay. Now, as price pulls up, look at all this. This is a week. All right. This is a week. Oh, every candle's a week, man. That's a lot of time. So actually up here, I wouldn't even mark this one up here. The mark is down here. The mark is down here. And you can see the low was broken here, and then price pulled back, came down further, and then we broke that. There's your chart there. I'm sorry, I got distracted by the phone. Somebody always calls here, a particular person always calls here while I'm recording, and it drives me nuts. Okay, so all right, so we have this impulse going all the way up, and this establishes a lower high. Just look at it. Lower low, lower high, lower low, lower high, lower low, lower high, right? Once the lower high is established, we now have a trading range, all right, from the last lower high, lower low to the current lower high until this makes a lower low, which would make this our trading range here. If we start getting big enough pullbacks on the way down and then break that low, all right, then this becomes our trading range. I hope you understand that. All right. So we're going to go down to the other trend. So what is the expectation here? What the expectation is that we're bearish and we're expecting price to make a lower low after a lower high. We're looking for price to take out these lows to make a lower low. Something else. Why would I expect price to take out those lows? Are they weak? Yes. Why? Because it didn't break structure. It didn't break structure, didn't make a new high. So this becomes a weak low, and I would expect them to be ran for liquidity. Okay, let's go to the daily. And what do we see? On the daily, now we have the break of structure. You see how many candles that is and how high that pullback is? That is a break of structure for me. All right, and that means on the daily, we are not bearish. We are bullish. This is bullish. I don't know why I got so loud all of a sudden. All right, I get a little excited. All right, so we are bullish here, but we didn't break that high. That's something we're gonna keep in mind. All right, that means this is a weak low. All of these are weak lows. All of these are weak lows. Why? Because they didn't break the highs, and that's why they were they were broken. Structure-wise, because we're running for liquidity. They've become targets for liquidity. All right. Now, this one makes this high, and we see that price is on its way down. All right. So we are in this trading range. Divide this trading range. That's why I have this here. Divide this trading range into, I got the wrong thing, into two halves with a 50% in the middle. All right. This is equilibrium here. All right, this is equilibrium. Where do you want to buy? Where do you want to take your short? You don't want to take shorts from here. You want to take shorts here at discount prices. This is premium. This is discount just by the numbers, right? But you want to take the institutional price, the price that institutions are going to take for shorts. You want to wait till the price comes above the 50%, above the 50%. In order to take shorts. Now, we don't know if it's coming back there. We don't know because it's on its way down. So intraday guys, day traders, yeah, we're going to wait for that pullback, and then we can do something there, because there's a lot of pips between this 50% mark and the bottom of the trading range. All right, and we do expect price to take out these lows, but this is the best prices. All right, 61.8. If you use a Fibonacci, 61.8 is the area that I look for. I look for price to come back to at least the 50, the 618, excuse me, above the 50 before I think about taking shorts, and holding on to this swing a short. You understand? Here, but I'm going to be looking for shorts because I believe these lows are weak, and they're going to be a liquidity point, a liquidity target. Okay, so we're on the daily here. All right, so I hope you understood that the 50% of the range. Whenever you have that range, if you have the range figured out, just think in terms of the higher time frame, right? Because we got this from the weekly. This is the weekly trading range. All right, 50%. You want to take premium or you want to take discount. You understand? You want to get the best price for your shorts and longs. All right, we're going to go down one more time frame on the weekly. All right, what are we looking at here? All right, are we bullish or are we bearish? Are we bullish or are we bearish? Well, the last break of structure was to the upside. All right, so we're technically still bullish. However, what I want you to realize is this trading range was never violated until price, thinking in terms of the higher time frame, until price breaks this high, we're not bullish. Technically, on the higher time frame, we're not bullish. The higher time frame tells just dictates what the targets will be for the lower time frames. Just keep that in mind. All right. It could come all the way back here. The 7-1, like this is like a 78.9 Fibonacci retracement, probably beyond that, maybe 85%. All right. But as long as it doesn't break that, we're still looking, we're still bearish, and we're still looking for a lower low to be made. That lower high could come all the way up here, just like it did, and it's still a lower high. Okay. Keep that in mind for the big picture. Okay, so this is the weekly. I don't know how I got back here. We're on the 4 hour now. Why are we on the 4 hours? So we can take a look at this price action. What are we seeing for next week? Well, we can see that price hit this what appears to be a mitigation block, but price hit hit this what looks to be on the weekly a point of supply, right? Because it's a doji, but this is a range. Remember that, and there's a high and low to that range. This is where price sold to buy. All right, and in order to get out of the cells of this buying venture that the market went on, the market makers went on, they got to come back and mitigate out of that. And this is where they would start that mitigation, right at the top of this range where the selling started. All right, I hope you caught that nugget. All right, and so when we come down here, you see how price is reacting here. Now, again, like I said, some people call this we'll call that a mitigation block and all. All right, but what are our incentives for a price to come down? What do we look at as incentive? We see that there's an imbalance here that price has to fill. All right, we also see that these are unmitigated order blocks down here that price will probably want to come down and fill. And we also know that there's liquidity down here for price to come and get. All right, so can we see price turning around from this area? Yeah, but I think my feel is that it'll be just a reaction and not a rejection. All right, and maybe we come back up in here, up in this area, and we might reject from here, or maybe we might even get a little froggy and price might find its way up here. But in either case, I believe this will be temporary, a temporary weakness in the USD, and allowing the pound to look like it's gaining strength. Okay, so what I'm looking for is maybe this. Come on, maybe this, or price could come through that area and go up higher. It's very possible. All right. If we look at just a sneaky peek at the 1 hour, let me get rid of this thing because it looks so awkward. All right. We see that price did not take out the highs here, take out this pullback. All right. And we can see that price made this low, right? We see that price made this low, and then the pullback was beat here. All right, we came back. We still held the low, and price broke that high. This is a chalk here. This is a change of character once it broke that high here, and we didn't break structure. This would, if we break this would, for me, it would be a break of structure. All right, this looks good. This looks like on on the, this is the 1 hour. On the 1 hour, there's a lot of candles here, but I would like to see these highs taken out before I decide, I say, oh, looks like we are turning bullish. You understand? You know, I don't want to get too crazy with this. I'll take a look at this, the pullback here. We got 56 here. We got 40. You know what? You know what? This does look like a break of structure. I'm looking at it right now. And we had, I want to be careful with this. Low, pull back. We break that high. We respect the low. And then we go higher. Two breaks higher. And then we pull back, return the impulse. Yeah, this looks like we are turning bullish. And that should go down in your notes. All right. So I will be looking for a price to take out these highs and quite possibly turn around here and then come back and take these lows out. I hope you follow that. I hope you follow that. That's on the 1 hour. Here we can see price came down, gave us a bearish engulfer here, and then that was beaten. That was took out here. We come back to retest, mitigate this order block, and it looks like we could see some temporary weakness in the dollar. And like I said, quite possibly we can find ourselves turning here, you know, turning at this one, turning here or turning here. All right, we'll just keep an eye on these areas because I believe it's going to come up a little bit, and then we're going to come back for those lows and fill in that impulse and continue on down. All right, this is all going to be temporary if we turn it around. All right, all temporary. Let's go to the next one for God's sakes. All right, last one, USDCAD. Let's go to the weekly. All right, and what do we see on the weekly? We see price coming down hard, right? Very aggressive, breaking lows and all that good stuff. And then we have a nice turnaround, a very sharp turnaround. I like to call it V turnaround. This is kind of like a U. It looks like a cup and handle, but it's not. It's sharp enough, doggone it. All right, so we start breaking higher. All right, and this is all I want to notice. We make this low. We make a pullback, higher low, and then ever so slightly we break this high. All right, this is a technical break of structure. All right, and we are continuing bullishly, and it looks like this low, the pullback, because it's higher than the previous one, looks like an established higher low. So what would I be expecting? Looking at my arrow, I'm expecting us to continue bullish, right? Bullish, technical break of structure, expecting a higher high to be made. I'm expecting price to come and take out those highs. Why do I have that yellow line there? Because I believe that's a weak high. Why? Because it didn't break this low. Didn't break this low. So that becomes a liquidity target. Let's go to the daily. And what do we see on the daily? All right. Now I was bullish on the weekly. Am I the same way on the daily? Look at this. You know, we have a nice little magic trend line. You know, it's been pretty good on that trend line, right? And it looks like we have a break of structure here. All right. On the weekly, this is a change of character. But on the monthly, on the daily, we have a 2 candle pullback here, right? And price breaks lower than that low. Come on, man. Why are you embarrassing me, man? All right. We'll break that low, coming for taking the liquidity, and then breaking that high as a break of structure. Boom. We are bullish. We are bullish. They have a nice impulse, we have the correction, and then another impulse, breaking that high. So we are definitely bullish here. All right. What are my expectations? All right. I expect price to break these highs. We have liquidity up here, and we're making on the higher time frames a higher low, higher high, higher low. I'm expecting that high to get ran, not just for liquidity, but that is my expectation. You know, again, I approach my charts neutral, all right, neutral in thinking, because I don't want to stay married to a bias and then it doesn't work out. You know what I mean? And I'm still trying to take longs or whatever, and it's clearly going the other way on me. So, you know, but the expectation is for price to continue higher. Let's take a closer look at the price action on the 4-hour. Now, here's the break of structure. This is a pronounced view of the price action on the 4-hour. All right, we have a break of structure here. Actually, on the doggone it, on the daily, I have it marked here. That's why I don't like things to show up at the same time, man. This thing threw me off. This 2-candle pullback is borderline for me, honestly. This is borderline for me as a break of structure, as a real pullback. And I would lean more towards calling this a change of character, an early signal that a break of structure could be imminent. All right. But that break of structure, you know, this is close. This is close for me. So I'm just letting you know that. And on the 4-hour, that's not close at all. It's an actual break of structure. You know, that's a nice pullback there. And then we come back. And then we come back, we break that low. All right. We get another chalk here for the 4-hour. We see the low, this low made. This is the high that made that low. And when we break it, we have chalk, but we continue to take out these highs and establish a break of structure. So we are bullish on the 4-hour, and we see how it's going now. What are we seeing up here? We see a double relative equal highs. We see more liquidity even higher if price should violate this bearish order block here, this supply, and we see bullish, bearish, bullish, and now we have a bearish candle. All right. Do I expect a reaction here? Exactly that. And I don't think it'll be a reversal. I think it'll just be a reaction. I believe that price will continue higher. If we take a sneaky peek at the 1-hour, we can see that price action formed a bearish engulfer here, right? We come down lower, and then we come back up. We respected that high on this way back up. We didn't take liquidity. We did not take liquidity. So I'm looking to see how these next couple of candles, you know, how they form, because this body is engulfing the previous one. We see a return. We see a test, a mitigation of this base candle of the bearish engulfer. So could we see price, even though it's a doji, could we see price come down further into this one? See, what we have here is opposing zones. All right. And this is where it's a closer look at the price action is required. So we're taking an even more naughty peek at the 15-minute. All right. And you can see price broke down. We made new lows, taking that liquidity from up there, from down there, and we broke up to the top. Now, here's the deal. I think this is a weak low. Why? Because we didn't break these highs. So if price comes back down, here, I think we take these lows out. Doesn't necessarily have to be, because what could price do? We could find this order block here. Right? We can find this order block here, and then take out these highs and the higher the high of this order block here, and we can take, then price could want to come on down here and take out all of this internal liquidity for a pullback, then go up. We can have that higher low still be made, but we're going higher. We could be going higher. So I am looking at both of these situations, and what it requires is some logical thinking. All right, what do we have here? Higher low, higher high, all right, higher high. All right, do I expect price? Could I expect a reasonable reaction here, and maybe we come down to here, then break the highs? Yes, that's exactly what I'm thinking. That's precisely what I'm thinking. Just stepping back, I believe we take out these lows and we find support down here. I think that is a plausible outcome. Well, sequence of events anyway. I do believe we're going to, price is set up to take out these highs. I believe we're going to pull back and then go up first. But that's on the 15. We're looking at the 4 hour. That's where we're supposed to be. That's where we mind our business. Okay. So I am looking for maybe a retest of coming into this this bullish order block here. All right, we have opposing order blocks here, so it can get it can get weird. All right, what I would look for is a reaction here, and then a pull up. Maybe we take out these highs here, and then maybe we go higher. I'm not sure. I'm not sure here. I just lost my thought here. I'd like to see if we come back in here. I'd like to see if we come back in here, and then if we get chalk or whatever, then that's one thing. But if we're not getting any kind of signs, I'm looking for a deeper pullback, and then up. But this would be a temporary short-term weakness in the dollar. Could we just continue up? Yeah, we certainly could. We certainly could, but I'm thinking a pullback might be necessary. It might happen because we're just reacting to the supply. There's a lot of liquidity to get over here. Excuse me for drifting off there, because I don't want to get caught up in the weeds. I think I'll stop it here. We've been on long enough. I hope you found this beneficial, and I will see you in the next video. Hey, I appreciate you guys supporting the channel. Just make sure you smash the like button, and give a like if you want to see more of these kind of videos. All right, if you have a request, maybe if there's a market or some pairs that you want analyzed, let me know in the comment section. Okay, and do not forget to subscribe. All right, you don't want to miss my updates. All right, I like to give updates every so often. So during the week, if I see a hot list, or a hot trade or a hot setup or something that's pending or whatever, I like to make sure I give my subscribers updates. Also, do not forget to tell a friend. I'm trying to build this this community up. I'm trying to build a community here, and I want to bring you. I want us all to become the best traders that we can be. And I'm hoping that I'm helping with that process. I'll see you guys in the next video. Take care.